The Federal Reserve Act was passed in 1913. So prior to 1913, there was no Federal Reserve. Now, it wasn't that there were no central banks. There actually were. The Federal Reserve is not even the first central bank we had. It's the third. And it should have been three strikes, you're out, because this is the worst of the three. And it's also been around the longest, which is the biggest problem. This central bank has been around for more than 100 years. The first two only lasted about 20 years each. Unfortunately, the Fed has been around for more than 5 times as long. That's the problem. But the first central bank we had, I think, started around 1791-ish, something like that. I don't know, I think. And it lasted about 20 years. That's it. Then they chartered another one, the second bank. A lot more people are familiar with that one. That one lasted about 20 years, but that one was ended by Andrew Jackson. And that was the best thing that he did as president, was kill the second central bank of the United States. Then it was about 80 years between the second central bank and the Fed, the third central bank. And those were probably the best 80 years we had as a country. I mean, not counting the Civil War, right? So the Civil War was probably the worst 4 or 5 years we've had, right? We were having a war with each other, right? But after the Civil War ended, 1865, we didn't have a Fed. And we didn't have a Fed until 1913, just before the First World War. But for all those years, the country had no central bank at all. And that's when we had the greatest economy. Even Donald Trump talks about how great our economy was in the 1880s, 1890s, 1900. One of the reasons it was great was because we didn't have a central bank. We had sound money. We were on the gold standard. And we had the Industrial Revolution. We had this huge economic boom, the Gilded Age, all this great stuff. All the immigrants that were pouring into the country, they came in when there was no central bank. We would be better off without a central bank. Now, why, after 80 years of economic success, did they resurrect the central bank for the third time? Because the reasons that they gave have nothing to do with the Federal Reserve we got now. In fact, had somebody proposed back in 1913 the current Federal Reserve, it never would have been enacted. Nobody would have been dumb enough to buy it. So what was the goal of the Federal Reserve? Well, there was I think there were two or three main objectives. But one was to provide a superior bank currency. Because number one, the Federal Reserve was independent. It wasn't part of the government. It wasn't just independent like today. I'm just jumping ahead of myself. But Walsh said that, yes, the Fed is independent from government, but it's not independent of government or something like that, that it was part of the government. It's not supposed to be part of the government. That was the design. And what are the ways you know this? If you get a letter from the Federal Reserve, it's got a stamp on it. If you get a letter from any government agency, there are no stamps because they get it franked through the post office. See, if the government sends mail, they don't have to buy a stamp because they own the post office. So they just send it. But the Federal Reserve has to actually buy stamps from the government. Why? Because it's not part of the government. It's a private banking syndicate. And the reason it's private is because there's no constitutional authorization for it to be part of the government. Because if you read the Constitution, you don't even have to understand it. If you read it, the U.S. government is not authorized to print money, right? Issue bills of credit. That's paper money. The states are denied the power to do it, and the federal government is not authorized to do it. All the federal government is authorized to do is coin money. That's not the same as emit bills of credit. The states, the Constitution, Article 1, Section 10, says no state shall coin money or emit bills of credit. And the only thing Article 1, Section 8 lets the federal government do is coin money. They're not given the authority to emit bills of credit. And again, if you understand the Constitution, you read the 10th Amendment, the powers are denied to the states and given to the federal government. So the states can do anything that they're not prohibited from doing, And the federal government can only do those things that it is specifically authorized to do. And so the federal government is not authorized to coin money, so is not authorized to print money, so it can't do it. It can take money and put it into a coin. Well, what's money? Well, the only thing that can be money is gold and silver, because the Constitution says that no state shall make anything but gold and silver legal tender for payment of debt. And the federal government is not given the authority to make anything legal tender, so it doesn't have it. So it's set up an independent bank to do things that the U.S. government cannot do on its own. So number one, that's why the Federal Reserve is independent. But one of the main goals was to create a superior banknote to the private banknotes that were already in circulation at the time. You see, even though we were on a gold standard, banks, private banks all over the country issued note currency backed by gold. But the problem was, what if I had a note from a bank in Boston and I went out to California and I tried to spend it? How does somebody in California know it's real? He might not know what banks are in Boston. Maybe it's counterfeit. There was a lot of questions. It was hard, if you took the note far away from where it was issued, because, we didn't have these big banks that had branches all over the country, and you didn't even have a telephone. You couldn't validate. I mean, we guess they had the telegraph at that time, but it wasn't as easy to validate if a check was any good, or a note, not even a check, a bank note, right? An IOU from a bank. And, some of them had dubious quality. You didn't know how much gold actually backed it up, right? Who the hell knew? So the idea was to create a Federal Reserve note, a private bank, and the Federal Reserve note would rediscount the notes of other banks. So what would happen is, if you had a note from a bank in Boston, instead of taking that note out to California, you would take that note to the Federal Reserve. You would give it to them, and they would substitute their own note. They'd give you a Federal Reserve note. They would take that note and give you a Federal Reserve note. Now, what the Federal Reserve was required to have backing its note was that note plus 40% gold. So the Federal Reserve had to back each one of its notes with the note of another bank, plus have 40% gold backing it up. Now, you take that note, that Federal Reserve note, to California, and now the California bank recognize, not the bank, whoever you give it to, oh yeah, that's a Federal Reserve note. That's the Bank of the United States. That's our central bank. I recognize that. I'll take that note. And it was supposed to be of higher quality than other notes that didn't have 40% gold backing. Maybe they had 30% or 20%. But of course, the IOU was 100% redeemable in gold. You could always get gold. So if you had a note for $100, you could get 5 ounces of gold, because gold was $20 an ounce. So we were always on the gold standard. All the Federal Reserve notes were redeemable in lawful money, gold. But in order to issue the Federal Reserve note, they had to be 100% back by another form of commercial paper, a note from another bank, and 40% gold. High quality notes. What is the Federal Reserve note backed by now? Nothing. It's got lower quality than any of the notes that were in circulation prior to 1913. So instead of a superior note, it's a lousy note. So once I'm Fed chair, if you ask me about the dollar, I'm not going to talk about it. I'm going to defer to the Secretary of the Treasury. I'm just going to talk about interest rates, which again is bullshit, because he's in charge of monetary policy. And the last I checked, the dollar is our money. I mean, think about how ridiculous it is that the guy who's in charge of our monetary policy can't talk about our money. And the idea, if he believes in price stability, what is price stability? It has to do with the purchasing power of our money that he says he can't talk about. So again, the idea that a Fed chairman can't talk about our money. By the way, our money is not really the dollar, it is the Federal Reserve note. If you take our money, take a $1 bill or a $100 bill and look at it, what does it say? Federal Reserve note. That's what's written on the dollar. In fact, it's not actually a dollar, it's a Federal Reserve note. We write the word dollar on the note, but the bill itself doesn't say this dollar. It says this Federal Reserve note. That's what it is. So imagine you're the chairman of the Federal Reserve and somebody asks you a question about Federal Reserve notes and you say, I'm not allowed to talk about Federal Reserve notes. Well, they're your notes. They're your liabilities. How could you not talk about your own notes? Nobody other than me bothers to question the idiocy of that statement. The Federal Reserve, the chairman of the Federal Reserve can't talk about Federal Reserve notes. He can't talk about the value of Federal Reserve notes. He can't talk about the purchasing power of Federal Reserve notes. Somehow he's handcuffed